I don't really see the point in doing a full because everyone walks the last half of the marathon anyway. So
that's kind of how I'd see that one.
Yeah.
I've done a couple of halves and I've done tons of.
So with the half, I genuinely think you can race it.
Yeah.
It is a proper
It's
race.
called a sprint Ironman, is it? Is that what they call it?
No, sprint would be. That's smaller than an Olympic.
Oh, right.
That's really small.
I
But
see.
half Ironman, I genuinely think you can race it. I think the Ironman, unless you're full-time pro, you just can't race it.
Yeah.
It's too much. Actually, the guy that a mate of mine I used to race against sailing-wise, he coached me for mine, and he's just set the third best ever British Ironman time.
Who's that?
Sam Proctor is called.
Oh, okay.
Lives in Norfolk. But he did the marathon in 2:40 or something at the end of an Ironman.
You doing the marathon this year?
No, I am going to do a marathon. Not London.
Not London. Presumably you've done it.
Yeah,
That's the one I did, actually. The crowds were amazing. It was great, but it's too popular now, isn't it? It's too busy. Too hard to get a spot, I suspect.
It is indeed.
A lottery. Literally a lottery.
Yeah. Even best for age.
Lots of people seem to be doing Brighton, but I think Brighton's actually quite hilly, as far as I understand.
No, it's not. You just run out along the front, don't you? Turn it down the
It's
half.
also notoriously inaccurate. 2 years they couldn't measure it.
Is that right?
so nobody's time's counted.
So are you going to do a Berlin one and try and break the course record?
Well, I would. It's 50.
That's the fast one, isn't it?
It's 50-year anniversary, so it was impossible to go. So I might probably do Frankfurt.
That's the other fast one, isn't it?
Yeah, sounds good.
So, and Seville is everyone's favourite. Or Valencia and Seville.
Oh, is that right?
They're both really fast.
Yeah, I guess you can take the other half and pretend it's a holiday for them and do a little run in the middle.
Yeah, it's a really good thing to do. I want to put my feet up beforehand and I'll be exhausted after.
Knock yourselves out with the kids.
Can't possibly go for a walk. I'm tapering.
Yeah. What do you mean all downstairs?
Good. Should we get cracking?
Yeah.
Good. Well, hello everyone, and welcome to Taking Stock After the Bell, episode 28. After a brief hiatus for end of the tax year and all that jazz that goes on in March, but good to be back. And today, delighted to be joined by Nick Wood. Nick, good afternoon. Little intro we've got here for him. So Nick graduated from Birmingham University with a degree in economics and a master's in Russian and Eastern European studies. He is a chartered financial analyst, charter holder, and associate of the Chartered Institute of Securities and Investment. Nick previously worked at US asset manager Capital Group and investment consultancy Stamford Associates. Nick heads the fund research team at Quilter Cheviot, recommending the best available funds, investment trusts, and ETFs for clients across all asset classes and geographies. Nick chairs the funds committee, an alternatives committee, as well as sitting on the firm's headline asset allocation committee, which we had this morning. Outside of work, Nick races in long-distance running and triathlon events. He's represented GB in amateur world triathlon and duathlon championships and has been the winner of the British 10-mile championships within his age group. Sounds exhausting. Nick is also involved in a number of charities and currently sits on the investment committees of King's College London and Cystic Fibrosis Trust. Don't they call it King's College London? Don't they call it Strand Polytechnic? Is that the nickname for it?
I suspect it. Very nice.
Nick, welcome anyway
Thank
to
you.
the programme. You are sort of a resident Japan expert, and there's been, fair to say, a bit of news about Japan of late. So we thought you'd get on to talk about it. So I think we'll probably kick off with the first chart here, which just is snappily titled "The Land of the Recovering Stock Market," which, for those who see what I've done there. So this is the MSCI Japan Index going back to 1970, which shows that the index did pretty well in the 80s, peaking in 1989 before going through a near 40-year bear market and has recently hit all-time highs, which is very exciting. So why don't we kind of start with the 80s bubble and talk us through some of the kind of fun facts of why the stock market did so well through the 70s and 80s.
Yeah, no, definitely. It's interesting as I was thinking about sort of talking to you today. I found it interesting the amount of times I was comparing to the current stock market, but then also sort of thinking Japan is a land of contrast versus I think the rest of the world. I think we might sort of come on to some of those today. But if you go back to 1989, you might see an investment landscape that sort of mirrors what we're looking at in the US. So at the moment, we can't help but talk about the Magnificent Seven. We had the FANGs before that. But if you go all the way back to 1989, you'd have found a global stock market dominated by Japanese companies. 6 of the top 10 companies were Japanese, banks dominating within that list. You'd have found MSCI World Standard Index to be the largest constituent to be Japan, 44%. US was smaller weighting than that, and Japan 6% today. You can see how much it's shrunk clearly, and we were completely in bubble territory. And the very best example of that was if we flip onto that slide again, we've got. There were bubbles everywhere, but real estate was one of those. And that little picture there is the Imperial Palace in Tokyo. And I was lucky enough to be there in November. And for those of you that run, as I clearly do, that's a nice 5K all the way around. Same as your park run, if you've any of you that do that. Now, that piece of land was estimated to be worth more than the entire state of California, and that still sort of completely confounds me how that's possible. But theoretically, so that just kind of gives you a sense of the bubble territory we're in. But I all those statistics, none of them. I don't think you directly relate them to where we are today. But it's just interesting to see. We're in a different period. The stock market's dominated by 7 large companies from one country. So, but the kind of things which dominated, it was banks were clearly a large part of that. Exporters equally very large parts of that. And there's plenty from back in '89 that we might come to talk about, which is still relevant to Japan today.
But it's fair to say it was like a bubble of all the bubbles, right? I mean, it's up there in the top 5 of
yeah, oh no, absolutely. I mean, you've got the tulips still out there, but
East India Company.
No, absolutely.
.com and Japan '89. It was pretty extraordinary.
And what's the population of Japan?
Oh, now you've got me. I want to say
100 million, 200 million. I mean, it's
I want to say 200, but
okay,
that might be a stat that is I'm going to fall over with immediately.
I'll double check. That. We'll write the notes.
But it's substantial.
Yeah.
Bigger than the UK.
Yeah, and Tokyo is an extremely populous place. But actually, I think back in '89, actually, it wasn't a place that had great infrastructure necessarily. It wasn't so advanced at the time.
Well, it's been a bit of a miracle, isn't it? Clearly it was flattened during the Second World War, and then 40-year period after that was a period of very rapid growth. And I guess the current comp would be China, wouldn't it, in the last 30, 40 years as well, to the same degree.
Yeah, exactly.
Well, I was going to ask about that, whether the similarities you see in China, obviously not in bubble territory at all, but in terms of population issues, demographics not looking particularly good, and whether there are some similarities with Japan, and we could have that the same issues in China as potentially.
I mean, potentially. As I say, it hasn't gone through this sort of a life cycle for sure, but they definitely have. I think I read a headline today that 300 million pensioners to look after shortly.
Yeah,
it's a very large number.
So what was the bust like in Japan? I mean, the stock market kind of fell, but it didn't. I mean, it's taken 30 years to unwind, right? Yeah,
no, absolutely. And I think one of the things that's still reflected in the stock market today is, there are plenty of senior leaders of companies in Japan that have been through this this entire cycle. I think are still scarred by it. They're investors. In the UK, and certainly plenty I speak to who've been around for long enough to the more senior investors, should we say, who actually still won't invest in Japan exactly because of this. So it's been quite extreme. If you're in the UK, of course, bear in mind you get a slightly different return profile depending on on the currency and how it's done over time. But
on that sort of age thing, that's quite interesting. I mean, if you're now running a big Japanese company, you're probably, let's just say, you're between 55 and 65. So in 1989, at the peak of the bubble, as it blew up, you were 25 to 35. So that probably is still scarred on you. Whereas you can sort of foresee the next 10 years as the next generation come through into management of Japanese companies. They don't have necessarily the same scarring tissue from the bubble in the late 80s, early 90s and the blow up.
There's plenty of that.
Mindset change.
Although actually you might have to adjust your ages there, because there are plenty of Japanese companies still run by 80 or even 90-year-olds.
Is that right?
No, really.
No, absolutely. So this is something that it's certainly something that we've had discussions with fund managers. Company X, whose president CEO is very near. Well, they're well past the age of retirement, you might say, but they're at some point there will be a new generation taking this on, and perhaps that's how things will change. I wondered it, just going back to our first chart there. I found them the last 15 months have been quite interesting in terms of what's driven the market, because I think it gives a really good snapshot of some of the things that are interesting in Japan today. So we've had we'll come on, I'm sure, to talk about the currency, and exporters have done really well from weekend. So that's been one particular area of strength that's driven the market. But it hasn't been the only thing. AI has been, again, last 15 months, that's kind of all we've talked about in the investment world in many respects, ChatGPT. You sort of forget that Japan is still very technologically advanced. They are very much, plenty of companies that are providing the picks and shovels, and there are 3 or 4 really leading companies that have been right at the forefront. Tokyo Electron, Advantest, Disco, all performing particularly well. So they have that element, and that global leaders, I think, is something that is worth bearing in mind in Japan and not ignoring. We had April last year, we had Warren Buffett touchdown in Tokyo, and remind everyone that after, I think it was 3 years of making his first investment in Japan, he was very happy with it. He's going to keep investing, and of course there is a group of investors around the world that follow his moves very closely, and just more broadly, I think it gives a bit more
credence. I think,
it gives a more credence to Japan, and so that all of these things kind of coming together, and then lastly some reforms and initiatives around corporate governance that have led to some companies sort of share prices appreciating very significantly. So all of those factors, I think, are quite interesting, and just the last 15 months are just the drivers have been sort of areas that we might continue to think about going forward.
Do you think they've been a beneficiary of sort of the fallout with China, some onshoring potentially? Has that had an influence?
I think certainly one of if we were just to talk about simply where you put your money as an investor, actually, there's certainly been a slight anywhere but China narrative in the last 12 months, and of course Japan is politically stable. It has potentially some of the drives that you might look for. So I certainly think it's been a beneficiary in that way, and perhaps if you're in the US and you're looking for an area to partner with, Japan sort of makes sense. I think they are a from a geopolitical standpoint a potential beneficiary of some of the issues we've got in the rest of the world, actually.
Definitely. Sure. We've got a couple of charts on the macro before we move on, just to talk. I mean, the blue line is, so there's these 3 lines. It's core inflation in Japan in blue, US in black, and the UK in orange. And we can see going back 20 years that Japanese inflation has been very low / negative for large parts of it. And I guess prices probably haven't gone up until the last year or two, where we can see the kind of post-COVID spike quite clearly. So kind of mired in deflation and kind of hold that thought, but we'll talk a little bit more about the demographics and sort of influence on that. And then we've had this, we talked a lot on the pod in the last, how the world has changed, how interest rates have normalized. So these are 10-year government bond yields, US and UK in yellow and blue respectively. Germany, I think it's Germany in grey, and Japan in red. And Japanese government bonds have been sub 2% for a long time, and in fact went negative kind of in 2016-ish and have been basically zero ever since, but they have kind of ratcheted a bit higher. And then, sort of suggestions of normalization there in the bond markets and interest rate environment. And then finally, we've got the currency. So this is the yen versus the dollar. And we've got the blue line going up here shows the yen weakening against the dollar up to kind of 150, 155 today, having been, down at 80 or up at 80 yen to the dollar, I guess, back post-financial crisis. So, clearly from a macro perspective, it's been pretty sluggish. Growth has been anemic. Inflation's been low. The currency's been weak. Are there sort of signs that that's kind of beginning to change a little bit, do you think?
Yeah. So maybe the best place to start on that is in terms of inflation, and slightly where I hold my mirror up and sort of see a different picture in Japan, because here we're desperately looking for inflation to be lower, and what a bad thing this has been. In Japan, really, I suppose if I go back to 2012 when Prime Minister Abe and Bank of Japan would sort of set a 2% target and completely failed to achieve it. And they have wanted inflation, and they've wanted to get out of this disinflationary zero inflation environment. And finally, we've achieved that. And the problem, really, if you think, well, what is the problem here? What has this caused? And it's caused companies to make the right decision to hold cash. Cash is a good idea. Cash on the balance sheet. Japanese corporates, huge amounts of cash on the balance sheet, sat there and criticised for that. But actually, if you've got deflation, that's potentially a good investment.
Yeah.
Same with individual investors, retaining cash. So there's a lot of the potential here in part is higher inflation means you want to put that money to work, because it's being worn away, and you might reinvest that, you might be acquisitive, you might invest in growth, you might simply give it back to us as shareholders if you're a corporate. But it kind of ungums the economy a bit. But it's certainly been it's definitely been an issue for Japan long term. So this is seen as a good thing. Yeah, I mean, it's some lots of things, lots of areas you could touch upon in terms of inflation. One bit of data I found interesting, or anecdotally, was that you can hire a Japanese software engineer for less in Japan than you can in Vietnam, and Vietnam is.
Was that right?
Vietnam, in my mind, is seen as the next cheapest source of labour. Now that China isn't. Well, actually, not so much. Actually, you can go to Japan to do that. So it just shows wages have stagnated for an extended
is that a
period.
currency impact as well? Just that the yen's been weak, or is that
I don't think so. I mean, it's just simply that with zero inflation, so there has been sort of
wages.
zero. Wages simply haven't changed. Maybe in terms of Vietnam, maybe. Sorry, in terms of how that.
Was it the case that I'd heard that actually it was a result to not get a salary decrease in some cases in Japan as Japanese worker because of the deflation? Well, that might have been one of those.
Yeah, I haven't come across that. I have to say that might well be the case, but I haven't particularly heard that. But I think stagnation itself is has been pretty. The result has been pretty extreme.
Certainly has.
I mean, you visited a few months ago, right? So what were your sort of impressions of the place from a kind of cost perspective?
Yeah, I mean, it was. So I think most people you speak to when you talk about Tokyo would say, Tokyo is a very expensive place, and perhaps that harks all the way back, or even 10 years ago, it's, or less so, is expensive. But it simply wasn't expensive in any way, and we did there's obviously the classic Big Mac index. We did the the Nick and Carly, my colleague who went with me, Nick and Carly's sort of breakfast index in where we went, and for my morning sort of latte and something to eat, I think it's just over £3 in Tokyo.
So really,
London, maybe I'm paying a bit too much, but my breakfast of choice at Pret was just over £7.
that's £3.80 for a latte, isn't it?
Exactly. And then you go to Singapore and it's £8, and you go to Hong Kong and it's £9, and so they weren't all exactly the same, but same. And again, I'll come back to
it's
my
probably
running.
$15 in the US.
Yeah. No, it's huge difference, and a pair of running shoes half the price of going to the ASIC store in Tokyo, and I can get them for half the price I did here. So that was a couple of things, but there were plenty of others. It felt really cheap, and now tourism is really on a high at the moment, and that's before the Chinese tourists have come back. So there's more tourists to come, and if you're watching or listening to this and taking anything away from it, now is the time to go on your holiday to Japan. It genuinely is pretty cheap and clearly a very interesting place to visit. But no, there is a real differential there, and it's part of that is the currency. Part of it is we all know sat here the price of the things we're paying for keep going up and up, and it just hasn't happened quite so much in Japan, so it kind of all makes sense.
So it does. So I mean, it feels like there's a lot of tailwinds at the moment. Do you expect? You said earlier 6% of MSCI. Do you think that starts to grow larger as we go forward? It becomes more of an important index because that's double. I mean, it's double the size of the UK in terms of its index weighting, but it feels like it's very well positioned.
Yeah, no. I mean, you would. I think there are plenty of structural tailwinds. Interestingly, so overseas investors structurally underweight, and that's if you look at global equity fund managers and how they're positioned, they've been underweight for an extended period. Of course, naturally, the more a market outperforms, the less you're able to just ignore it. But I think in the last 10 years, there's been plenty of reasons to ignore Japan, and things like there's been the odd corporate scandal, like something like Olympus, that I think have led some fund managers to go, well, I just don't understand Japan. And quite frankly, having been lucky enough to one, go out and meet fund managers in Tokyo, but also sort of meet companies alongside those fund managers, you realise it's a difficult place to invest. It's not it isn't quite the same as investing in UK, US, Europe. So there are maybe some sort of structural elements to that. But there are some great companies in Japan. There are some market leaders, plenty of market leaders. And I think, there's the opportunity for that to grow from here. I'm sure not back to 44%, but it's there are plenty of tailwinds. And if you're, we've got the currency chart on here. If you're a sterling investor, those Japanese assets you're buying, if the yen strengthens, and I'm convinced at some point it must from here, those assets become more valuable. Now that might have a negative implication for the exporters, but I think we're at an extreme here, and it's more a case of when, not if, really. The currency.
And that cultural difference in the sort of corporate world, I guess, is interesting. And presumably, if you're looking to gain access to Japan, country specialists fund with kind of boots on the ground is a horrible phrase, isn't it? But with expertise, it probably makes more sense, does it, rather than kind of someone sat in an office in London, maybe?
Well, that's an interesting point. So one of the so I've covered Japan for many years, and for most of that time, nobody's really cared. So it's quite nice to have a bit more interest. But one of my rules of thumb had been to avoid domestic Japanese asset managers, and it's tended to be in Japan that asset management, I guess, what we'll say, wasn't a particularly beloved industry necessarily. I think there perhaps you might say if you look at what is sort of best in class in terms of investment propositions, you probably want, in a team environment, you want challenge, and maybe some of the cultural elements would suggest that the seniority rules, and so perhaps you don't get some of the best outcomes. There's also potential, some of the mega banks in Japan, there is an element of conflict there in terms of natural conflict between the asset manager and the investment bank. And it's interesting if you look at if you look at the GPIF, the world's largest pension fund that's based in Japan, they happen to have used Western asset managers primarily. Right? They haven't necessarily used the big domestic banks and their asset management capability. So that's I'm not saying that universally there are no good investors in Japan. I think a nice sort of in between is to potentially have a base in Japan. Perhaps you're a Western asset manager with a base, but investors based in Japan. Language skills definitely helpful.
Yeah.
So there is an element of the two, but it's not necessarily, in my view at least, up to now. Let's invest with.
I guess part of it would be if you're finishing university and looking for a potential career, and you've seen the Japanese stock market fall for 30 years and no one wants to invest any money, it's not exactly the most attractive prospects, is it?
Exactly.
So maybe the quality of manager coming through might not have been there. This might change.
Absolutely.
It's interesting, isn't it?
Absolutely. No, every market has got its own nuances, and that's one of them.
Yeah.
So what are what's happening on the ground in terms of changes and reforms and attempts to kind of get corporate Japan going?
Yeah. So again, stepping back a decade, and Prime Minister Abe, who sort of had quite a number of initiatives to really get Japan going again, and part of that was corporate governance. And you might say
very dry, very boring.
Very. It's hard to get excited about the topic unless you're focused on Japanese equities, in which case it's a little bit more interesting. That has got a real sort of fillip in the last 12 months because the Tokyo Stock Exchange have come out and sort of pronounced that really they're quite unhappy with the number of companies trading on very low valuations. So we've got a chart here. This was September, but take it as pretty much still relevant. 50% of companies with a price to book of less than 1. The book value of your assets is less than the price that you might turn up and pay for it. So that's quite extreme, and it's certainly extreme compared to other markets. So they came forward and said, look, we want companies who are trading at price to book was one measure, but low price to book or with a low return on equity to put forward strategic initiatives in terms of how they are going to improve the situation. So sounds simple, but what they're really asking is, tell us how you're going to make your company more valuable. So, it's not if all companies knew how to do that overnight, I'm sure, it's not that easy. But there are things that companies can do, and those kind of things might be consider the cash balances that they have. Might they go hand this back to shareholders? And you see where companies do share buybacks, improve dividends, you can see share prices improving markedly, and some of these factors might improve your ROE. For example, you might. It's interesting how many companies have cross shareholdings, allegiance shareholdings. So, for example, I own 5% of my market cap is held in shares of my leading customer, and vice versa, or potentially the bank in which I get my loan from, and actually a lot of the vice versa, a lot of the banks potentially own shares in
Take equity in the companies.
Yeah, no, exactly. So there's a huge amount of that going on still to be unwound, and actually, I mean, on the one hand, it can be hugely it can be a huge risk if we're talking about large numbers. I met a company which had, I think it was 30% of their market cap is invested in equity of other companies. That's a big risk there. So de-risking and selling those, and that can unlock value straight away. So that could be part of the element. So this is the initiatives have been. It's been interesting. There's not many. There's not many times that I've seen some sort of initiative like this get sort of universal support. But whether it's whatever kind of investor it was in Japan, sort of, but in terms of style, value, or growth, they've all said, this is a meaningful initiative. This is a real positive for Japan. It's much more. It's more helpful for a manager that is buying the very cheapest companies, the value managers. But it's something that really. I think everyone thinks will drive the value of the Tokyo stock market in general. Is it happening? What is actually happening on the ground? Well, you can imagine there's quite a broad spread. Some companies have been very proactive, and they've initiated changes already. There are plenty that are laggards. It opens the door, though. It opens the door in terms of activists, for example.
Okay.
So the I saw a recent chart that Japan is now the second largest market for activists after the US, and
there's generally shunned activists over the years.
Yeah, historically, I mean, it's been I mean, back in the day there was some some proper sort of gunfight, shall we say. 10 or 15 years ago, and it didn't go well for the activists. That's really changed now, and you've got a real range. You've got the kind of activists who you really probably wouldn't want knocking on your door, because it's probably not going to be a very pleasant conversation. To plenty of fund managers who would describe themselves as soft activists, and we have good interactive conversations with managers who often or companies who often ask us for our advice, and so there is a lot of that going on, but this can really unlock value, and but the stock exchange reforms, what they certainly do is they open the door even more to the activists, and say, well, look, this is what the Tokyo Stock Exchange is saying, and
this is what
you've got until 2025 to do. Are you what is it? And we suggest that perhaps you might do this. And so it's fascinating. It's and we one or two fund managers we work with who have engagement is a key part of what they do, and they say, well, look, some are very open to this, others no interest. They're never going to change. Well, who knows? Sometime down the line, and so there are some you move on from. So it's, in some ways, as an investor, it can be a little bit. One manager described it to me as sort of corporate whack-a-mole, because you don't actually know which company is going to announce the big buyback, next, and how. So it is. There is there is an element of uncertainty there for sure. But I think you finding managers who can either sort of make that, encourage that to happen, or are able to sort of work with management is, it's pretty a pretty interesting opportunity, I would say.
And what about valuations in general? I mean, other than the fact that price to book is generally quite low on a sort of earnings basis, Japanese companies look okay compared to the rest. Do we think?
Yeah, well, I suppose I've often found that almost any regional fund manager can give me a chart that shows their part of the market is cheaper than the rest of the world, with the exception of US fund managers, because of course MSCI World is dominated by the US, and that's the most expensive market. So, but it's I'd say it is cheap. Earnings growth has been pretty decent. Earnings revisions are coming through, and it's stating the obvious. It's not as cheap as it was, and maybe there's a little bit of a risk there in terms of the a stronger currency if you're sat in Tokyo, sort of limiting the upside. But that for someone sat in the UK is an interesting opportunity.
But the market's also quite sensitive to global economic growth, right? And the industrial production cycle. So when your manufacturing globally is doing well, the Japanese corporate earnings tend to do quite well. Is that fair?
Yeah, no, absolutely. And it's a very cyclical market, and it's very sensitive to global growth certainly more than most. So if we're feeling more bullish about life, then this is certainly a market that's tended to perform.
We're all bulls now, aren't we, Easy? Market's gone up.
Absolutely. I'm just admiring the Shimano cassette on.
So we got chart here of MSCI Japan in yellow versus the quality segment of the market, and then we've got a few pictures next to that. Nick, do you want to sort of talk us through some of those companies in the kind of quality bucket?
Yeah, definitely. And actually the chart on the left is actually what that's highlighting is that. So the quality bucket has sort of outperformed the broader market, but actually of late it's actually lagged quite a lot. So some of these sort of high quality names are actually they haven't performed quite so well of late. So maybe that's in terms of valuation that looks attractive. But there are a huge amount of market leaders in Japan. Some of them are extremely niche and in supplying. Small parts where they are almost 90% market share, but you probably wouldn't you have no knowledge of them. Some of them are absolutely sort of front and center of daily life, and Nintendo in my house is certainly a big factor. But if you look at IP of the likes of Mario, really, Nintendo is an incredible company, and I think if it ever was sold, the IP there, if Microsoft were to buy that, for example, not I'm suggesting that's likely. It really is a market leader in some of its IP of its characters there. We all know somebody who gets on a bike at times and uses that Shimano kit in the middle there. James sounds more familiar.
Yeah.
And that third picture is robotics factory Fanuc, and I think that's actually a factory where the robots are building the robots, just to be completely dystopian.
Wow.
But really, all of these, I think, how would you describe them? They are it's a very technologically advanced. There are plenty of companies which are absolutely at the forefront of technology. It's interesting to see Taiwan Semiconductor always in the news, but in the news for the recent earthquake. Interesting actually that they're building. They've just announced they're going to build a second fab plant in Japan. Their first one came in ahead of time. Within budget, whereas the US version in Arizona is, I think, running 2 years behind time and way over budget. And sort of good example of, and I talked about the wage differential even more so. Can you get US engineers versus Japanese? So interesting. I think the tech side's very interesting. But there are a lot of global leaders, and I think we sort of forget that Japan is still out there. I think all sorts of stats about Japan, but in terms of even copywriting ideas these days, I think Japan and Tokyo is still an absolute hub in terms of number of ideas copyrighted globally, actually. Right. So still a hub of innovation, which you may not. You sort of may have forgotten, or because I think we forget most things about perhaps we didn't know them in the first place.
And then the demographics. Obviously, am I right in thinking that there are more people aged over 75 than under 18? Is that right?
I think that statistic is probably right. But it's certainly the most challenged demographics globally, pretty much. Certainly, Yeah, and I mean that's problematic. I mean, one of the things that's resulted in is by necessity, robotics and automation is something that has become part of part of life there and a part of a way of resolving it. So, well, what do you do if you don't have workers? Well, actually, you can put in automation. Actually. There's a very, very tight labour market there at the moment, and I think there is plenty of sort of potential slack in the system. So Japanese corporates have tended to sort of expand in all sorts of different areas and perhaps focus less.
Yeah.
Now, where we're talking going back to some of those initiatives about sort of corporate reform, well, do I need that sort of really unrelated part to my business, and actually what do I do with those people? And actually I'm not making them redundant because I really need the people, so I'm moving them across to the core part of my business. So actually there is an element where perhaps this is by necessity you can improve corporate life. The other thing that I always find quite interesting is womanomics is a phrase that came along with Abenomics. Where they're
terrible phrase.
It is terrible, but that was the one slightly coined. Bringing women into the workplace, and actually, Japan has gone from a laggard and now beforehand to now actually leading the G7.
Okay.
Versus, no interest. Now I'm not. I don't think that means. That what that doesn't mean is it doesn't mean that the leadership of Japanese corporates are all female. Quite the opposite, quite frankly. But it's certainly improving, and that's one area. And I think immigration isn't something which it's fair to say immigration isn't a great topic for Japan. They're not a country who tend to sort of want that to happen, but I think there has been some sort of skilled immigration into Japan in certain areas. So, there are perhaps ways around this, and there perhaps restructuring that is by necessity that helps you to.
Part of Womenomics was providing free childcare, wasn't it, from memory, or certainly
yes, I think there is
helping
an element of that.
Front.
And I know less around it, but there was more to it than certainly just encouraging them. But I think there's elements.
I remember the headline.
I guess if your labour market is tight and there aren't the workers out there, particularly if you're in service, and we think about the UK and what's happened in the last few years, things like going into McDonald's and ordering on the screen, which you now do in Costas as well, and self-checkouts to supermarkets. These are ways of when your labour market is tight and you're paying more for wages, then all of a sudden putting those computers and the technology in to replace, augment, whatever you want to call it, and then maybe AI helps the white-collar workers so that we can have our time freed up. So, but like a higher pressure labour market lends itself more to that sort of investment, and so maybe Japan has to do that because of the demographics and is ahead of us in that sense. They were actually.
I had a very funny story from one phone manager who going into the much more into the countryside and much smaller areas, and he said there in the restaurants, several restaurants he went to, that actually automation was even more prevalent. So you have these small restaurants where you might have a sort of a robot worker where they sort of have the sort, if you think of the stomach where you put the tray on and it goes to the table. But the amusing thing was that the staff there were sort of pretty old. So you've got these. You can imagine if you're I think about my mum necessarily working with the most advanced technology, and I'm being very ageist here, but it sounded like a quite amusing picture funny. Where actually it was where those who perhaps at least sort of technologically savvy were the ones actually who were working with
having to embrace it.
No, exactly, because actually in Tokyo there is sort of a younger population and perhaps in the countryside less so.
So then, just to sort of come back to the stock market, and obviously it's been a pretty decent 15 months, and you've touched on how it's been very interesting, and it's sort of, kind of Japan is back, maybe, and it's getting a bit more airtime. Does that sort of worry you in a sense when sort of sentiment gets a bit like because you've got the fundamental story of the reforms, the corporate governance, the economy might be coming back alive. You've got the valuations have been okay, very cheap. Yeah. And now you've got, Warren Buffett buying and sentiment kind of turning. Are we still early in the innings, or, is this maybe moment in the sun and it'll be gone again, like what happened in 2015, 16?
Yeah, exactly. I'm very conscious of trying not to repeat what my experience with Japanese equity managers is. I've almost never managed to get a Japanese equity manager to be sort of negative on the market. They were always very positive because it's always very cheap, and so I don't just want to be the sort of repeat that mantra. I think there are some uncorrelated structural tailwinds here, and those involve corporates, real structural change being able to take place and improve share prices in aggregate, and of course on an individual investment basis. Let's see, but I think that is something that I'm not sure there's anywhere else where that particularly exists. Korea might at some point be the next one to take those sort of initiatives, but there's that's quite interesting. It is cheap. It's not as cheap as it was, but it is still cheap. It stands out versus other areas that are less politically stable, and it stands out versus China, at least today, as an area that you might go, well, actually, that's a good place to invest. But at the same time, at the moment, it's underinvested by overseas investors. It's underinvested domestically, actually, and there's some changes in the ISA regulations, the Nippon ISA, to sort of improve, to try and encourage investors to add more to the Japanese stock market. So
just on that Nippon ISA, because am I right in thinking that the BRISA, the British ISA idea that we talked about a few weeks ago, the Nippon ISA sort of is based loosely on that, right? So if you've got an ISA allocation, you can only invest in Japanese.
No, actually, no. It's not actually. No, so the Nippon ISA actually is just the ISA, but
there are no limitations.
No, there aren't now.
Okay,
so
fine.
But I think the idea being, potentially you increase the allocation, and some of that is good. It doesn't take much of that to go into Japan for it to improve. But of course, they might just invest elsewhere. And I would say Japan's, it is if you're comparing valuations like for across sort of Japan versus US, you're going to find interesting opportunities and in high quality companies. So I think there's a lot to like about it. The worries would be it's a cyclical market. A strong yen might have an impact on the market, and there is the broader sort of demographics element to it. So there's it's all there are definitely risks as in every market. But I think if I was to take a sort of a 10-year view, it's it looks pretty interesting actually.
Okay, good. Well, from what you said, and judging from your trip and the reports back from that, it all does sound as though is it different this time? I'm not allowed to those words, but it's nice that the stock market's finally got back above the kind of 1989 highs and made a bit of progress, and valuation seems pretty reasonable. So definitely not investment advice, because we're not allowed to give that on the podcast. But that was interesting. Anything last things from you, Husey, before we wrap up?
No, I don't. I think we've covered everything.
Yeah, that was great.
Brilliant.
That was
Thanks,
really
Nick.
interesting. So thanks very much. Yeah, no problem. Thanks very much for watching and listening. Hope you've enjoyed this. Any questions or feedback, he's James.Hughes at Quarter Cheviot, and I'm Jonathan.Raymond at Quarter Cheviot. And we hope to see you next time. Thanks very much.
Thank you.